Good morning, everyone. This is Anne-Marie Band. Today is Monday, April the 8th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're taking a look at gold first because it has been running off the rails. This is the Fibonacci that I drew for it, and it is right at the top of this Fibonacci expansion range. You know, that's really far away from the mean, this 8 exponential moving average, and I noticed that once it does that, there's a little bit of a topping. Watch it pull back in a little bit. This is a little bit overly exuberant in my mind. And so I'm gonna say, hey, careful about buying right now. We need a little bit of a breath here. And my suspicion is that a pullback into the near breakout levels might be a good thing. A lot of people are getting really hopped up on the idea that we need to be long gold and stay long gold, and we know that rotations don't quite look like that. So do want you to be very cautious of that one. On the daily, it looks even more dramatic with the measured move really expanding here. For me, I like the short with the stop right above the top here. Now that's a wide stop for gold, but I do like the short action. You could probably bring the stop into maybe a point higher than the close of Friday, but congestion test seems very likely to me. All right, let's take a look at the YM. We're going kind of backwards and all over the place today. I apologize for that. But what we are looking at is bounces into resistance, and those resistance bounces are being met by sellers. So until we get up over 350, 360 and pull back and hold this 340, 39, 340, 39, 330, it's going to be sell the bounce and buy the dip, right? Buying pressure certainly under here. Look at it from a daily perspective. We know when we see these sorts of things, we have buyers underneath pushing us up into resistance. What is this formation? We have negative pressure here, so they're going to be trapped buyers or new sellers that are sitting around this 39,489. Try to look at things from the wide angle. Pick the wide angle trade near price congestion. Watch for it to either fade or hold and then continue. This 343 makes for a great line, so we might have a good trade just into that opening space. All right, so looks fantastic, and buy the dip in play. Remember, you can use your volatility bands to tell you what is going on. Whoopsie. Actually, let's go to oil. This one's also running off the rails. Geopolitical, running off the rails. But very, I mean, it's to me, this chart is sitting in a space where my suspicions are telling me that, hey, listen, you got to buy this. See, upward motion here, upward motion here. It is a buy the dip, but it's a little long in the tooth, so we're looking for a blow off top, a resolution of geopolitical disturbance, and then a pullback that could send us higher, right? I mean, we are in an energy dearth. We need more energy, but you know, we'll see what happens here. The higher this goes, the harder it is to keep inflation tame, and they are going to want to keep inflation tame. So that's going on with oil. We'll watch this. It is by the dip, right? If you're looking at this, it is certainly by the dip. There was the first test, and it went right back up over 85.50, 85.30 actually is that number, 84.30, 85.30. It's got this, you know, this move up to here. Now notice, this bounced higher, couldn't hold high, and closed underneath the close of Thursday. Today, it's holding the floor of Thursday, but it's still in a gap. So my thought is, if you're buying the dip here, you better see that it holds up over this 86.89, or it's telling us it's going to rotate down. Notice, what is this saying? See the gap up and then that fade. My thought, I like the punch up to short simply because I know the chart's a little overheated, but that is what we're seeing geopolitically. We are seeing heat, right? Saber rattling, bear poking, and the like. All right, so what are we looking at here? Neutral to bullish, Support getting bought, that 18,252. Resistance getting sold, 18,400, 18,386. Listen, we're above the close of Friday. We are below the high of Friday. If we get above the high of Friday, buyers are going to get very enthusiastic and they're going to continue to rise up into this zone. If we get up into this area and we cannot hold the highs, we are going to fall right back down into the formation. What do I think? I think this is what we're going to go see over here. We're just trying to work off extremely overbought levels on the weekly and monthly formations, and that means sideways action. This is exactly what I suspect we're going to see. So that is buy the dip and sell the rally, but wait until the rally collapses before you try to sell it. Listen, I make that mistake all the time, but at least I know how to manage my risk. And I wish I didn't make that mistake all the time, but being totally transparent, I do. Now, here we are. What are the traders trying to do? Well, they bought the dip. That's 52.44. Let's move that number down, right? Looks like 52.36. I think 52.36 is a very viable number as key support, right? And where are they bouncing to? 52.70. Listen, if they get above 52.72, 52.73, they're going to trigger a bunch of short sellers that need to get out, and so they'll buy to cover. My suspicion is if they do that, we have the ability to get back to 5,300 in no time flat, right? No time flat, literally. We just need to say, we just need to be watching for what the price action is doing here at this current time and realize we are in a buy the dip mode. And if we break out of this, it's going to trigger short sellers getting out, which is a buy to cover, and long traders going, ooh, I'm out of my range. I got momentum. I'm going to buy to go long. And that could send us all the way back up here. Again, what do I expect? A lot of candlesticks that retrace each other in a very wide angle over the next 2 to 3 months. This is certainly what I'm thinking. Let's take a look at SPY. Hello. What is SYPT? I've got no clue, friends. SPY, trying to bounce. Is this a long formation? Absolutely. It's above the close of the prior day, and it's working towards the high of the prior day, prior trading day, which is Friday, and that is going to be up at the 520.50. Traders are still buying the dip. Where could they go to? All the way to 522, 523. Listen, they could break up and go to 530. It could be. My suspicion is that they stall out because there's no real news that is punching up the space, and then, you know, we'll start earnings season really coming through the wires in just a bit as we are into the second quarter and ramping up that sort of thing. All right, so here we are looking at this. It is buy the dip. What's the ideal dip? I don't know, 517. If they lose that area, I would not think about buying anything until really 515 or even 512. Okay, so we have to watch out and realize that we are a little bit news sensitive today. Use your volatility bands. I don't know where my lines have gone, but use your volatility bands to help you make your trades, right? Look at the range expanding. We're above the VWAP. So what are we going to do? Pull back, we'll hold, and we'll walk into the second and third standard deviations. Notice this is already really high. So 520 looks like a space it's going to stop and go and then maybe pull back and give us a little bit of support. All right, taking a look at the Qs. Same sort of thing, expanding range, 441. That buys out. Look at the dips going into the second standard deviation band here and then bouncing. Notice, see when momentum is doing this? You buy the dip, folks. You just have to wait for the right dip and not just go willy-nilly saying, all right, this is my dip. Pay attention to where it stops heading lower, and then you take it. Same sort of thing going on. Topping formation or a breakout formation? Which one is it? Well, it's probably going to start as a topping, but if it pulls back and it does not break down below this congestion, they are going to turn around and ride it higher. It is what it is. All right? Watch the lines in focus. It's It's going to be supremely important for us to catch these edges, lower highs, but holding the lows. And that is always messy trading. Take care, everyone. I'll see you on the platforms.